Hey there. So something interesting is happening. The S&P 500 is dancing to its own beat, not quite in tune with the usual economic indicators. This shift started post-COVID times. Now, we've been used to a predictable trend since 1992, but things seem to be taking a different turn. The big question is this trend that's been rock solid for so long really a good one? Could it possibly lead to an economic hiccup down the road? In our upcoming video, let's have a friendly chat about what's going on with the S&P trends and economic indicators. It's a fascinating topic, and we'll explore it together. Take a look at the graphs on the left and right. The left one currently represents the S&P 500, while the right one illustrates the movements of economic indicators. Now, here's the intriguing part. Traditionally, these charts have shown the S&P moving in sync with economic indicators. However, a curious twist has emerged. The economic indicators on the right are trending downward, but the S&P on the left is on the rise, a trend unseen since 1992. Wondering when this started? It coincides with the time of the coronavirus, marking a departure from the usual relationship between the S&P and economic indicators. What could this mean? In my opinion, some voices in the financial world suggest that this market trend might lead to a significant crash in the cryptocurrency market. Others are more optimistic, arguing that when economic data is high, the S&P tends to follow suit. During overall market crashes, historical trends kept the movements of economic indicators and the S&P in sync. However, currently these two trends seem to have diverged. As we ponder the long-term outlook of this market, could this deviation be seen as a positive development? It's worth giving some thought to. And this is the great news from JP Morgan analysts. They've shared that the outflows from Grayscale's Bitcoin ETF are slowing down, which is a positive turn. The team, led by Kenneth Worthington, mentioned about $15 million net sales last Friday, and even though it's a bit small, it's a shift from the recent trend of redemptions. And that's not all. The slowdown isn't just happening at Grayscale. BlackRock's Bitcoin ETF sales are also easing up, according to insights from Bloomberg intelligence analyst James Seyffart. While outflows from GBTC have reached over $5 billion, the gross flows for other Bitcoin ETFs stand at $5.8 billion. In the 11 days since these ETFs hit the scene, there's been a net inflow of $759 million, not too shabby. As the excitement around these ETFs cools off a bit, Worthington suggests we might be entering a more normal flow environment. It seems like the buzz is settling down, especially with slowing transaction volumes noted by Seyffart. JP Morgan analysts had predicted a slowdown in profit-taking from GBTC, which they believe could be good news for Bitcoin, limiting further downside. All in all, it looks like we're in for some positive shifts in the crypto space. And the right-hand side of tweet by Arkham, despite the not-so-great outflows in Grayscale, there's a glimmer of hope, as it seems they might be settling down. Digging into some blockchain data from Arkham Intelligence, it looks like Grayscale made a move by transferring around $289 million worth of Bitcoin to Coinbase Prime. This suggests they might be getting ready for some sales. Now, when you look at this alone, it seems like good news for Bitcoin, but, and there's always a but, we need to balance this with what's happening with the other 9 new US spot Bitcoin ETFs. The flow into these funds seems to be slowing down a bit. They added about 46,000 Bitcoin last week, compared to around 60,000 the week before. Now, that previous week was just a 4-day week, but it's something to keep an eye on. There are times when whales buy. When you look at them then, as you can see, this green color is very high like now. I like the buying section. It is believed that the current level has almost reached the level of October 2022 before the FTX collapse. However, If you look closely at the green sections in 2023 and 2022, you will see that as this section gets wider rather than an increase, it immediately leads to a decline in sales. It continued, "We are buying a lot like this." To put it simply, the question remains whether the whales will ultimately realize profits together with the ants. So, when it comes to questions like this, you need to think about the fact that it cannot be unconditionally considered a good indicator. Currently, from what I see, there is GBTC volume among the downside negative factors, but I think it is inventory volume before the halving. I think the highest volume before the halving is another bad news. So, at the left-hand side and tweet by Ali, BTC miners had quite the day on Jan 17. Selling over 10,000 bitcoins, the biggest daily drop in miner reserves in over a year. According to the wizards at CryptoQuant, this amounted to a cool $450 million at today's prices. Now, miners are like the yin and yang of the crypto world. Sometimes they're in a hoarding mood, and other times they're ready to cash in. Back in 2023, a Bitfinex report spilled the beans that miners started gathering Bitcoin around mid-2023 when prices were more down to earth. But you know how it goes. When prices and profitability start doing the happy dance, miners switch gears and get into selling mode. It's like a cycle. They either want to top up their cash flow or snag those sweet higher prices during a rally. Right now, Bitcoin has been hanging out in the $42,000 to $43,000 zone. The Nifty data also spills the tea that Bitcoin miner reserves are at their lowest since July 2021, a stash of 1.83 million coins, which still packs a punch at a whopping 78 billion. So while they're not holding as much, it's still a pretty impressive treasure chest. And the right-hand side of tweet by Unfolded, after the halving, Bitcoin's mining cost is expected to be around $37 to $800, and it is believed that it will be difficult for small-scale miners to survive if Bitcoin is less than $40,000. So the current Bitcoin price is around 43,000. So it can be said that they are cashing out in advance to secure funds that can survive after the halving. Therefore, analysts predict that the selling price of the miners may increase slightly. It is said that the Bitcoin ETF fund inflow is 5 times the daily Bitcoin mining volume, and if you look more specifically, $200 million worth of funds are flowing into the Bitcoin ETF per day, and a certain volume of Bitcoin is also used in cold storage in the market. They say it is being moved to. On the other hand, considering that the number of Bitcoins mined per day is about 900, this is equivalent to 5 times the amount of mining. So, this means that EFT fund inflow is far ahead of mining volume, and this means that supply cannot keep up with demand. The Bitcoin Accumulation Trend Index of institutions is showing the largest increase in 3 years. If you look at the graph, you can see that the accumulation index has risen quite rapidly since November of last year. So, since it was November of last year, it can be assumed that institutions had already anticipated that spot Bitcoin would be approved and had begun accumulating it in advance. February 2024 has begun, and we will analyze how Bitcoin and the coin market will move in February and learn about 2 variables that affected the coin market. There are macro variables and variables of the coin market itself, and let's talk about how this has influenced it and what direction it will take in the future. First of all, if you look at the gift clearing map, the gift clearing map is really very accurate. I would like to say that when it was in the current volatility, it would go up and then go down, but you can see that it has actually gone down to 42K, and all long positions have been organized. Since it is currently moving sideways, it is a fun thing to predict volatility by looking at how many long positions and how many short positions have been established in the short term, because it is accurate and high. If you look at it, you can see that a very strong short position is being established around 44K. It would be a good idea to take a look at whether it will rebound after this and rise above 44K. I'm not sure how your January went, but I know for many it felt like a bit of a challenge. Yet, if we take a closer look at the numbers, Bitcoin managed to eke out a 0.62% rise by the end of the month. As we stepped into February, things took a bit of a dip, and it seemed like the start brought its fair share of pain. While Bitcoin itself saw some fluctuations, the altcoins were a bit sluggish, not showing much movement. Despite the apparent decline, when we delve into the data and compare it to the 2016 scenario, where there was a halving, the difference doesn't seem all that significant. In 2016, there was a 1% drop, and energy levels seemed to pick up steadily. Fast forward to 2023, and even though the energy might be waning, Bitcoin still managed to climb 0.62% in January. So if you're feeling a bit down, take heart in the fact that sometimes it's just a matter of picking the right stocks. Looking ahead to February historically, it's been a good month for crypto. Despite a rough January, February usually sees a bounce back. The only exception was in 2020, when the coronavirus outbreak led to a market collapse in February and March. Barring such exceptional cases, February tends to bring positive vibes to the crypto space. Here's hoping for a February full of gains and a bullish market. There's been quite a buzz about the top Bitcoin holdings globally, with companies like Grayscale, MicroStrategy, and BlackRock making significant moves. Looking at the graph, Grayscale initially held around 150,000 Bitcoins before the launch of the Bitcoin ETF. However, since the ETF's debut, they've been consistently selling and currently hold approximately 480,000 Bitcoins. MicroStrategy is another player in the game, with a notable stash of 189,000 Bitcoins. Now, turning our attention to BlackRock, they currently hold about 66,000 Bitcoins, while Fidelity isn't far behind, with around 59,000. These are substantial amounts, showcasing a rapid increase in Bitcoin holdings. What's intriguing is that within less than a month since the launch of the spot ETF, BlackRock has already made moves to acquire a significant amount of Bitcoin, adding to the overall trend. It seems like the race to own Bitcoin is heating up, and predictions suggest that more companies, including BlackRock and MicroStrategy, may join the League of Bitcoin holders in the near future. In the alt market cap chart, we observe the remaining coins beyond the 12th largest market cap. After an initial retest in the chart flow, the monthly candle underwent approximately 7 months of retesting before displaying a significant upward movement. Examining the MACD chart at the bottom of the screen, a golden cross occurred between 2020 and 2021, and notably, another golden cross emerged a few months prior to 2024. Subsequently, revisiting the others' market cap post the most recent golden cross, there was a second retest lasting about 4 months, followed by a notable upward movement. Currently, we are experiencing another phase of retesting after the latest golden cross. As we navigate through the post-golden cross periods, the chart illustrates a clear upward trajectory. Upon closer examination of the MACD chart near 2024, it becomes evident that the volume has been steadily increasing post the golden cross, with the momentum still on the rise. The volume trend aligns seamlessly with the overall upward movement depicted in the chart. We're diving into the relationship between Bitcoin and the dollar, using Nasdaq as the benchmark. Currently, Nasdaq is displaying an extended uptrend, surpassing even Bitcoin in its upward trajectory. This recent observation has sparked some comparisons. Bitcoin seems to share similarities with the traditional dollar, but it also exhibits subtle distinctions. If you take a look at the chart right now, we're at a particular point. Now, the upcoming period might present its challenges, but it's clear that we've moved past the tough times. The key now is making decisive decisions for the present moment. While there might be some bumps along the way, it's evident that the challenging phase is behind us. There's currently an urgent investigation into Bitcoin mining operators in the US, triggered by the emergence of Bitcoin spot ETFs. With the approval of Bitcoin spot ETFs in the United States, there's a significant demand for Bitcoin. Consequently, an urgent investigation has been initiated to understand and manage the operators involved in Bitcoin mining. The entire setup involves trusts, miners, brokers, and companies like Coinbase in the US. The critical point is that Bitcoin mining relies on electricity, and the source of this electricity is under scrutiny. As the US has become a major player in the coin market, controlling mining operators has become a priority. The operators' shareholders, including big players like BlackRock, are now being managed more closely. The US is taking control of the entire mining industry by managing the electricity aspect. This shift has both positive and negative implications for the coin market. While it may bring positive changes, it also means that any move by the US can significantly impact the entire market. This development underscores the importance of understanding and being familiar with the electricity dynamics in Bitcoin mining. The guidance provided suggests paying attention to the ongoing changes in the US, as it will likely shape the future of the coin market. While there might be price drops or volatility, it emphasizes the importance of doing the best in one's own place without undue worry. Surprisingly, South America, particularly Argentina, holds great potential for becoming more Bitcoin-friendly. Argentina, being a significant country in this context, has the potential to shape the Bitcoin landscape in South America. While the United States is making efforts to manage the situation, South America appears to be more open to embracing Bitcoin, creating a new axis in the cryptocurrency realm. El Salvador has already paved the way by adopting Bitcoin as legal tender, and there are expectations that other South American countries, including Argentina, may follow suit. This shift in perspective indicates that South America could play a crucial role in the evolving dynamics of Bitcoin adoption and regulation. While the United States is making strides to regulate the market, the openness of South American countries presents an interesting contrast. The flow of changes in South America is definitely something to keep a close eye on, as it could influence the overall trajectory of Bitcoin adoption and integration. Check out the red-circled section on Glassnode's Bitcoin listings graph. Around the 40,000 mark, there's a noticeable trend. Above the $5,000 price range, the number of items available for sale is quite limited. This hints at a scenario where short-term holders are seizing the opportunity to cash in on profits. As we journey ahead, it seems like the gates are open for potential changes in the market. Take a moment to reflect on these insights and consider the direction that seems right for you. Despite the downbeat news making the rounds today, there's an interesting twist in the economic trends observed in the S&P compared to the indicators. Surprisingly, it seems that whales are actively diving into Bitcoin amidst this challenging situation, hinting at a potential positive turn. But of course, let's not get too hasty with conclusions. All eyes are currently on the FOMC, where interest rates are currently in a freeze. There's chatter about a possible rise in rates come March, breaking the current freeze. Traditionally, when interest rates drop, the market tends to dip. But during a freeze, we often see minor bumps and sideways movements. It's a trend worth keeping tabs on. We're in a bit of a market limbo at the moment, not quite at the waist, not exactly at the neck, somewhere in between. Understanding this rhythm is crucial, and wading through the market with a blend of caution and strategy is the way to go. Stay informed, make thoughtful moves, and approach your investments strategically. If today's insights resonated with you, consider hitting subscribe, giving us a thumbs up, and flicking on those notifications for more content. Stay tuned for the freshest updates.